Okay, what's up guys? Jay Martin here, CEO of Cambridge House, and I'm joined today by the author of The Price of Tomorrow, Jeff Booth. Now, I've had Jeff on the show a few times through the end of 2020 and maybe once at the beginning of 2021, but he's been on a couple times and he's always fascinating to talk to. The Price of Tomorrow was a book that took the macro world by storm in 2020. He published it in January, right before the COVID pandemic hits. But a lot of his case for how the world was going to change over the next 10 years has just been accelerated by this pandemic. And Jeff's done the speaker circuit all over the world since then. And his book has been, if not the bestseller, one of the bestsellers in the macro world over the last 13, 14 months. Definitely the number one book that I've given away as gifts. And I read it twice last year. It really is amazing. So I got Jeff on because I wanted to talk about mainly two buckets. Number one, the debate that dominated my channel and so many other channels like mine was the inflation versus deflation argument. And the more I dive into this, the more I decide it's not this or that, it's this, then that. And that really is how Jeff explains it quite eloquently. So I was excited to dive into this with him, get his sense on timing, and get a sense of how the transition from what he believes inflation to deflation will occur. Slowly, then all at once. We also got into a lot of the opposition to his Bitcoin narrative or anyone's Bitcoin narrative. And I brought up just the key points that I hear from my audience who still haven't bought in yet. And I reiterate, it's okay to not be bought in yet. I mean, Bitcoin is a very exciting asset. It has an evangelical sentiment surrounding it, which can turn a lot of people off. And I understand why. In addition, it has no track record. 12, 13 years is not a track record. And so it's okay to look at it with suspicion and critically, and you should, all right? But you should also consider having a horse in the race, or at least look at it. I got into how I buy Bitcoin, why I buy Bitcoin, what makes me uncomfortable about Bitcoin, and all that stuff. And Jeff's a very moderate voice in the Bitcoin world, which I appreciate because I kind of get tired and exhausted by the frothy hype that you generally see on Twitter feeds and underneath YouTube videos whenever Bitcoin comes up. Jeff's a lot more moderate, a lot more thoughtful in his approach, and I really appreciate that. So Jeff Booth, the author of The Price of Tomorrow, back on the show. I really enjoyed this conversation. I hope you do too. If you do, please click subscribe, turn on notifications, and beneath this video, there is a pinned comment where you can join my weekly newsletter. I publish a newsletter every Friday. It's free, where I debrief conversations just like this one and plenty others, share my biggest lessons, biggest takeaways, and any action items I'm taking with my cash. Love to have you join the tribe. Okay, enjoy. What I love to do is introduce the right people to the right people, assemble the smartest people I can think of or reach out to carry that conversation, and that's exactly what I've done today.
Please give my panel a round of applause. Welcome.
Okay guys, Jay Martin here, CEO of Cambridge House, and I'm joined once again by Jeff Booth. Jeff, thanks so much for coming on. It's great to see you.
Hey, great to see you too, Jay.
So if you haven't seen any of my previous interviews with Jeff, Jeff, you crashed onto the macro scene last year on the back of your book, The Price of Tomorrow, which was published in, I believe, like December, January, prior to COVID, just for context. And, at a high level, the book argues for the deflationary impact of exponential technology, largely in the sense that whatever inflationary actions any central bank takes, those will be dwarfed by the deflationary impact of exponential technology. And then you go into all kinds of threads off of that thesis. Did I summarize okay there?
Yeah, I think so. I was looking for the root cause of all of what we're seeing in the world. And so if COVID accelerated everything else, but that root cause of technology's progress, it was there all along. And all of the debt and what people talk about in the monetary policy and worldwide, everything else is because of that cause, trying to offset that, is essentially trying to stop the deflationary impact of technology.
Right. And so Jeff comes from the street. I mean, you're an investor and founder of technology companies. as diverse as supply chain disruption, real estate investment, food production. And so you walk the walk. And your book, just so you know, is definitely the most gifted book for me in 2020. I think I probably bought and gave away 10 copies to various family members and friends. And there's always a book like that for me every year where it's like, this is the one I'm going to gift to everybody. And the price is, yeah, no, I mean, it's amazing. My brothers, my father, everybody got a copy last year.
It's amazing to watch because we talked about this before. I wrote it just because I care. I don't need to make money off a book or anything else. I wrote it because I really care about kind of the world we live in, the world my kids are going to grow up in. And I couldn't see the juxtaposition of what was happening, and nobody was talking about it at that level. And because they're two different systems. But fast forward to where we are today, I cannot believe how many people read that book 3 times, how it's still a bestseller in many countries around the world, and how many people reach out and kind of and all the way up the ladder from governments to to the top companies and everything else. It's been because once you understand the framework of what's happening, it gives you a superpower in understanding what's going to happen next. And if you understand the game board, it's way easier to understand the probabilities of the next moves on the game board.
I love that. Okay, well, let's talk about the game board. I like that. And I'm one of those people. As soon as I finished it, I turned it over and opened the first page again and read it a second time. There's a lot in there. So, I thought an interesting way to start this conversation, Jeff, will be to talk about what's changed since you and I last spoke, which was, I believe, the late fall of 2020. And a lot has changed. So maybe for context, some data points I can share with you what's changed in my life from my perspective. My realtor called me 2 weeks ago and asked if I was willing to sell my house, offered me 80% more than what I paid 2 years ago, and said she had a handful of buyers that were willing to move tomorrow. Now, I live in one of these hotspots. I'm 45 minutes outside of a city center in a beautiful little mountain town. And locations like this are getting eaten up right now because people want to move out of the cities, but be close to the city. Secondly, we're building a shed in my backyard. The boards that I was going to buy a year ago, you know where this is going, $26 at Home Depot, $94 today, 1 year later. 1 year later. So what's going on?
And again, if you go back to the first principles of the book, you have an inflationary system we've always lived in that's competing with a technology that's trying to drive prices down. And so if you allow that, if technology, most of the deflation, or let's say the what should happen with technology's impact on our world, is nobody puts technology in a business to be able to make prices go up. You put technology in a business to give more for less. And so look all around you. That is the biggest force in our life. It's why you use Google. It's why you use Amazon. It's why you use all of these products. And on one side, remember, 2 different systems. One side, if you allow that to happen today, you have this mountain of debt that deflation makes debt more expensive.
Yeah.
So and the debt can't be repaid. It's impossible to repay that debt. The growth rate would have to be so staggering to be able to repay that debt over time. So you have over $250 trillion of debt in the world, with 185 trillion coming in the last 20 years, as you would project, because you've had to add to it faster and faster and faster because technology is moving the other way. So on one side, on one system, you have technology trying to give us more for less. In the system we live in, with it, which is an inflationary system that requires essentially our money to be worth less every year, you have central banks trying to outrun that impact.
Yeah,
and so you know this from the book because I projected these. Because if you understand how fast technology is moving, you understand on the other side what has to happen to try to offset that. So what's happening to lumber prices is And what happened to housing prices is everything's running into stores of values to be able to, or to scarce goods to be able to try to find value in that. Essentially, your dollar is worth less and it's buying less. Is what's happening, because the central banks are monetizing the debt.
Yeah.
So, and the byproduct to society is pretty evident. Some people are getting very wealthy, and you're picking the pocket of others, and so that's driving this inequality that you see. And it's not just lumber prices, it's not just house prices, but it's food prices as well.
Yeah.
Now, what you'd have to ask from this equation, if you're looking at the next step, is, so what would businesses do if their prices are going up? And wouldn't they try to automate faster? Or if they couldn't get labor, wouldn't they try to automate faster? So you're in this cycle. And again, these are, I wish this wasn't true, but it is true. You're in these two different forces that are radically opposed to each other. And we've lived in a system, and we measure the existing system and all our outcomes from the existing system, and it's competing against a new system that is more powerful. So in the end, ultimately, so governments today, you see the stock markets today, I don't know when you're going to publish this, and I've said this is going to flail around for a long time. But governments today are forced with a really tough challenge. You either inflate this away, keep accommodative policies, and you have this kind of massive inflation rate, but it's targeted to certain things as technology goes the other way.
Yeah.
Or you raise interest rates, and if you raise interest rates, everything collapses. And so it just keeps on. So you essentially force that deflationary spiral, but there's nothing backing currencies. So once that deflationary spiral starts to happen, it just keeps on unwinding. And so I wish those weren't the choices, but they are the choices. So now you run the probabilities on what governments are going to do,
right?
And they might pretend they're going to raise rates. They might, but if that happens, or if they do it for too long, then you're going to tip into a deflationary depression.
So let me try to explain how I understand this concept, and you tell me where I'm on and where I'm off, Jeff, because the deflation versus inflation conversation dominated channels like mine, like Real Vision, like all these shows over the course of 2020. It was like two camps, one or the other, right? And to me, it's always seemed like neither one's right or wrong. It's just a matter of timing. We're going to move from one to the next, right? We're going to move from inflation to deflation, but it's a time horizon. It's not this, then that, this or that. So, I'll lean on the Mark Andreessen quote, software is eating the world. And as software eats more of the world, that part of the world becomes deflationary, right? And we've experienced this in our access to apps on our phone and the amounts of services and information that we now have for free, massively deflationary, right? But hard assets and whatnot are still inflating because of the money printing and the stimulus and all this stuff. As software eats more of that, eats more of the world will become deflationary. Is this the process? Like, am I understanding that correctly? Or what were your thoughts?
That's the process. And that's why I say most of the deflation is in front of us. So take any example. So let's use a real example to make this this real, and then we'll extrapolate into a bunch of others.
Sure.
But again, people will see these examples are all around us if you look. But let's just use one. When I was growing up, I bought a whole bunch of CDs. Even when I wanted to listen to one song on a CD, I bought a whole bunch of CDs. I had a collection of first cassettes and then CDs, and those were things, right? It was really just information, but it was described as things that I bought, and a whole supply chain and a whole industry of people who chose what music I wanted to listen to and stuffed a supply chain. So I would go to the record store and buy a CD. And that produced a whole bunch of GDP.
Sure.
And now I can get unlimited music for $10 a month.
Yeah, it's great.
So not like millions, tens of millions, maybe billions of songs. The world's creative energy, because production cost has gone to zero, distribution cost has gone to zero, and so now you can essentially take that information, digitize it, and it's there forever. And so you can monetize a catalog for $10 a month, and give everybody music. And so you've created a new kind of monopoly. Where is that showing up in GDP? It doesn't. It shows up as growth. Growth in a digital world, growth is where we're moving to, is negative GDP.
Right.
Right. It's massively negative in GDP. We have a wrong measure. We measure GDP as things, but more and more of our things are becoming information. Mm-hmm. And that process is accelerating. And this is accelerating everywhere. Energy. So on one side we have solar that's actually reducing energy cost, and I realize it's not, but it's reducing energy cost by 11% a year, and it's already the lowest cost energy.
Sure.
Now I realize there's battery backup, and it's not completely there yet on an LOC.
Sure.
But let's just say batteries are getting more storage all the time. Solar is coming down 11% a year. Now just follow that trend. So it's already the lowest cost energy. So it's competing with the entire energy grid. Mm. That's a tiny piece of energy growing each year and getting cheaper each year.
Yeah.
And energy is the number one input in everything else.
Right.
So if you have cheaper energy competing with other energy that's getting cheaper every year and expanding, not just 1% of the energy grid, but more and more of the energy grid, wouldn't that stand to reason that that's going to be additive to deflation over time?
Of course.
Of course. Just really simple.
Yeah.
So now on one side you have lower and lower cost, and everything built on top of energy, lower and lower cost. And on the other side, you have a system that requires higher and higher prices forever. So when you then print money, mm-hmm. oil prices, which are scarce, and we still need oil, mm-hmm. respond by moving up in price. And so, and then as they respond to moving up in price, a whole bunch of oil and now is economically feasible. And on the other side, you're moving faster and faster with technology. So the faster you're moving with technology on one side of the faster you have to print money.
Right.
And so all of this is what I described in the book. And we have a system change. We're living through a system change, and we don't know it. Most people don't know it. They haven't done they're measuring their system by the inflated asset prices.
Well, that's what we live. That's what we experience, right?
And we experience it. Our food prices went up. I need to find a job that pays me more.
Yeah.
I need to do this. And it's a very manipulated economy. Mm. There is no free market right now. In Canada, I think, or no, in the US, it's worse in Canada. 38% of all the spending is government support.
Isn't that amazing?
So it's amazing.
It's a shocking number.
And people don't, and it's worse in Canada, and people don't actually understand kind of what that means. I'm sitting on boards and everything else, and I see in a audit committee meeting, or that people are looking at the government spending line item in their company, kind of, or they offset to labor in their company, and saying we're really profitable.
Yeah,
and that's just showing the first order effects. What they're not asking is, what about all your customers that are also getting that wouldn't be your customers if that was removed? Mm. So when you realize how embedded this system is, and how governments effectively are forced now to continue to print because and they didn't see how fast technology was moving, and they didn't see what that change meant. And so what happens is that you kick the can down the road, and it gets worse and worse and worse. And so that's where we are. Winter is coming, unfortunately. I wish that wasn't the case.
Yeah, well, and it seems to be, when I hear you explain this, that we're going to continue to creep. creep subtly towards some inevitable tipping point. When we shift from, I guess, dominantly inflation to predominantly deflation, that may happen really fast, right?
So if it happened fast, there will be a nationalization of all banks.
Okay.
So think about what that.
Yes, there would have to be. Yeah.
Think about what that means. There's call it approximately $130 trillion of negative real interest bonds around the world.
Sure.
And so today you're already guaranteed to lose money on what people would say is the risk-free rate. Every other economic calculation is built on top of it, and on your best day you're going to lose money. And you know that governments have to print, so it's going to be way worse than that.
Yeah.
So that's where a lot of money is sitting. And so if you allow deflation to happen, if it starts tipping into deflation, and remember those bonds, there's nothing backing them. It's I borrowed money from you, somebody borrowed money, and so it's counterparty risk all the way down to the sand. And if you start having asset price declining, and debt against those asset prices or deflation, then the debt becomes unpayable and it starts to unwind. And that unwind would take down everything and force government's hands to save the system. In fact, save the system.
Yeah.
And probably at the highest level, and this is really important, really important. Where technology is moving today, you must have a currency that allows for deflation. You have to. That hasn't always been the case, but today it is, because how fast technology is moving. Because if you don't, the only alternative is to concentrate power in the hands of the state. Sure. Because remember, probably natural for a whole bunch of your listeners and you and everybody else is we actually expect we measure at zero, that inflation rate. Okay, inflation rate is 2%, or inflation rate is 3% or 1%. But technology, the base is actually way more negative. The technology might be giving negative 5% per year. Mm-hmm. So zero is inflation.
Sure.
Right.
That's interesting.
So we don't think about it that way. But on one side in our lives, we look for things that are less, where we get more for less.
Of course.
It drives our behaviors.
Human nature. Yeah.
Why would we live in a system where we try to make our money worth less, so we try to get less for more?
Yeah.
It doesn't make any sense. It doesn't make any sense.
Logically, we wouldn't choose that.
So if you just kind of follow where technology is moving, mm-hmm. and what's happening, if you don't allow that to happen, you're concentrating wealth and power, and eventually you have a completely managed economy. And after that happens, you typically run it into government by the biggest thug. Right.
Now, knowing this is how you think and what you see coming, and knowing that you've got a bit of money, and you could choose to locate yourself anywhere. Granted, you've got kids in school and all this, but those are things that you can manage. Why are you based in Canada, Jeff? And have you debated moving towards some emerging country with a healthier balance sheet? Is there any upside to that, or what are your thoughts?
Yeah, so this is I want to be careful on, because this is kind of a nuanced answer. Canada's actually, although we look in Canada as we say, okay, our balance sheet is terrible, everything's going to be terrible, but because Canada has so many raw materials,
sure,
it actually has a natural hedge against all this printing.
Interesting.
Why our dollar is actually up right now is because of that.
We produce a lot of natural resources.
We're rich in natural resources, and it's a hedge, and that gives us. Now, that's not going to last forever and everything else, but in this, it does give us a hedge, and it allows governments to get away with more than they could.
Sure.
I'm not talking about the negative externalities of those decisions, right? The concentration of wealth and essentially the government essentially becoming everything, right? There is no free market. But so today in Canada, I still live a really great life. And when I scour regions around the world and everything else, I still think this is a pretty decent place to live.
Yeah.
I suspect that's going to change.
Interesting.
And I suspect, but it's going to change in a whole bunch of regions as well.
Yeah.
Because of what we're talking about. And I've talked to you before about why I'm so pro Bitcoin.
Yeah, well, I know we'll get to that for sure. Yeah.
But because it's a lifeboat away from this,
Mm-hmm.
and I can remember 12 words and I can move anywhere in an instant.
Right.
So it gives me the flexibility to kind of see things react and everything else. We are still early in this cycle. It might speed up because the technology is exponential on one side and government printing has to be exponential on the other side. And it's not just that, right? It's the negative externalities from that, right? The divide of society.
Yeah.
Those are the things. Those are the things I would really worry about. You say that going back to that inflation deflation debate.
Yeah.
Governments can create inflation if they want to. At some sort of big enough amount of printing or destruction of the currency. If you have a printing press, you can create inflation if you want to. It's just what's the cost of that,
right,
to society,
right?
So, and again, structurally, they're trying to stop something they can't stop. And or because technology is moving faster. More importantly, why would you want to stop it? Isn't technology supposed to save our time? So why would you keep people on a treadmill trying to work more and more jobs that are going to be removed anyways? And you're trying to keep prices artificially high so that when people lose their job, they fall to the floor. So you have to save them with more printing. All to save a system that wouldn't be required if you let technology do its job.
And is the reason not just self-preservation at the end of the day?
That's exactly. They can't see the path to what it would look like. And I would say it's society in general.
Right.
Can't see the path to what it looked like. We believed for a long time, going through the book too, I had to come to terms with some demons I had to unwind some previous knowledge that I thought was true and had to face different facts. And those are hard to come to terms with because I thought inflation wasn't a bad thing. 2% inflation. But if you actually examine inflation, it's so what is inflation? My money is worth less each year and it's designed to do so. So if somebody came to you and said, I'm going to take your money without your knowledge, is that a theft?
Of course.
We don't call inflation a theft, but it is a theft.
Yeah.
And what if then they said, I'm only going to do it at 2% or 3% or 50%? Does the rate of inflation matter to the theft?
No.
And because it gives some people artificial money, so if you own a whole bunch of assets, you're winning.
Yeah.
And it picks the pockets of others. We don't see it as a theft because some of us are enriched by it and some of us are impoverished by it. And then we look at kind of people who are impoverished by it, who can't get into the best schools or can't get into everything else. And we say they should just work harder.
Sure. Right.
When their real wages are going down every year and they don't have the assets that are offsetting against inflation.
Yeah.
And so we don't see their pain in that. And it's really a theft. And why we didn't see it for so long is technology wasn't moving as fast. But now technology is moving faster and faster and faster, and it wants prices to fall faster. And so now you have to try to offset that gain with more and more stimulus, which is causing all hell to break loose around the world. So people can feel what I wrote about in the book. They can
100%.
feel it everywhere. It just kind of, that's it.
Yeah.
And as an entrepreneur, what I think about is I want to know the root cause of a problem. I want to know, I don't care what the answer is. I want to know the truth.
Yeah.
Because once I understand how something works, right down to the sand for first principle, then I can find the best way forward. All the energy goes into moving forward instead of trying to preserve what was that might not be anymore. And that's a long way to answer your question. But in every business, and I used on your show before the Blockbuster example, what's normal is people protect what they had.
Of course.
And there's a natural chain of events in protecting what they had, like Blockbuster adding candy aisles to the stores
To compete with Netflix.
Which is all that changed is download speeds moved faster.
Yeah.
And made Blockbuster's business irrelevant. But by the time they faced the fact that technology was changing the rules, it was too late.
Yeah.
That same thing is happening at a monetary policy today. So it's happening at central banks all over the world, and what they're doing is adding candy aisles to their stores.
Sure.
And so I've come to a realization, and that's if I went back to Bitcoin, and you can imagine how much work I've done on why. And everybody needs to do their own reason on why. But I've come to the realization that this system, it's impossible for the system to change itself.
Okay.
Without revolution and war.
Sure.
Which normally, when you go through these throughout history, is how the currencies are reset.
Yeah, every time. No one gives up power willingly. Governments especially.
Exactly. So the path that we're on, this sounds terrible, and I wish it wasn't the path, but the path we're on is revolution and war, out the existing system. And the potential best path on a transition is Bitcoin. I believe because Bitcoin it's a currency that allows for deflation.
Right.
And so right now you only have 2.5% of the world's population on Bitcoin.
Sure.
But there's a network effect growing. It's growing extraordinarily fast, and an entire ecosystem being built on top of it. And a lot of people would look at Bitcoin today like they would look at the internet in 1996. And they would miss everything that's coming.
Exactly. Yeah. Yeah.
Because you miss network effects.
Yeah.
And so they're measuring Bitcoin today, and is something that they don't think can be used very much, and forgetting what's happening with all of the entrepreneurs and the technology and the accumulation that's happening, the layer 2 that's happening on top of it. And they're going to, so how fast that changes the game. So right now you have 2.5% of the global population holding Bitcoin or on it. And that needs to be a higher number to essentially provide a transition from one system to another system.
Yeah. To be robust, it does need
to be robust.
But that's the way, and that really shifted my thinking about Bitcoin, because typically when I buy something, I know why I buy it. And because I know why I buy it, I know why I will sell it. And when it came to Bitcoin, I wasn't super clear on that, Jeff. Like I spoke to enough people like yourself and like Raoul Paul and Lynn Alden. And, I heard enough to know I needed a horse in the race, right? I needed a % of my net worth in Bitcoin. I wasn't super clear on why, to be honest with you. And that troubled me, because I look at this asset growing rapidly that began at X% of my portfolio, but at the pace of growth, it's more than that now. It's funny how it works. But I'd look at it and say, okay, well, if I believe Bitcoin is a speculation, then I should be de-risking, taking my principal out, taking some profits and lowering my risk exposure. But I don't believe it's a speculation. If I believe it's a future currency, then maybe I should be buying as much as humanly possible at any price, because by the time there's some kind of mass adoption, even in my neighborhood, the price would have to quintuple. Right? If I believe it's a safe haven asset class, I dollar cost average in, I don't sweat the price, and that's what I do. Right. And that's the easiest way to deal with an asset that I think is important, but I'm not super clear on. And I want to like emphasize this to people. It's okay to not be clear on what Bitcoin is. In fact, I think you shouldn't be. It doesn't have a track record. There isn't one. 13 years isn't a track record. So it's okay to look at it with suspicion, look at it with mystery, look at it with curiosity, but look at it. I think that's the most important.
Yeah, and what I would say is the deeper you go down the rabbit hole in understanding what's happening what Bitcoin, and even there's a lot of people in Bitcoin that don't really know, because they're still measuring an existing system. They think the existing system will still be stable. It won't be.
Right.
So so they back and forth, and even what you were just saying, how do I look at this and I measure my existing system? What I think is happening is Bitcoin is actually telling the truth about the technology deflation you're seeing everywhere. In other words, Bitcoin, against all other assets, every other asset, house, everything, housing, everything else will deflate against Bitcoin.
Sure.
It'll forever. For some time, it'll be really fast as there's price appreciation in Bitcoin. But later on, if assuming it moves out into government's pegged to it, or it becomes a currency, later on, the upward volatility will slow, and it would actually measure kind of prices coming down naturally through the economy.
Okay. Yeah. And that's the best answer. Is when I was like, look at Bitcoin, your response was, well, look at everything else. Right. And that's why you would look towards Bitcoin. Now, Jeff, like I know you've probably had this conversation 100 million times, the opposition to Bitcoin. And so I just want to give you a chance to address a couple things. So first of all, one of the biggest pro Bitcoin arguments is that it's finite, right? There's a fixed number, right? It's 21 million. There's never going to be 22 million. The pushback I get to that is, okay, sure, but it's seemingly infinitely divisible. So what's the difference? You can't have 22, but you can have, if you can divide, it's like saying there's only so many $1 trillion bills in the world, but it doesn't matter because you can divide them into pennies. So it's like inverse printing. So what's your response to the almost exponential divisibility of a Bitcoin? And then does that really qualify as a finite asset?
100%. 21 million is a finite asset. The divisibility doesn't matter of that finite asset. It's divisibility just allows more people to participate.
Sure.
So
but if you think about it in terms of Satoshis, then the number is exponentially larger.
Yeah.
Right. Which eventually we will.
Exactly. If you think about it as US dollars divided by pennies, or trillions of dollars divided by pennies, and you can print unlimited trillions of dollars, that it's the same thing. Right. So you can't print unlimited 21 million Bitcoin. It's 21 million forever. And then the entire stack is, even though it's divisible, you have a hard cap. It's divisible so the world could use it. Everyone in the world could use it. Mm-hmm. Because if you didn't have enough, then it couldn't ever be a currency. Sure.
And this is a juvenile question, but is there a limit to the division?
100 million.
100
million per Bitcoin.
Per Bitcoin.
Yeah.
100 million Satoshis per Bitcoin.
Yeah.
Okay. Got it. Now, okay. So the next question I get is, a lot of people claim that Bitcoin will be the destruction of our financial overlords, right? It's this new decentralized system that eliminates centralized power and all this stuff. The pushback I get to that is that, yes, but there's a very small percentage of people who have been buying Bitcoin for the previous decade or even today. And, if they're holding, by the time we do get, we're at 2% and change, by the time we got to 50%, if we do, that original 2% will be holding so much more wealth in Bitcoin than anybody else could ever accumulate, that the overlords don't disappear. They just shift from
I love the question because essentially we're going to dispel some myths on this.
Great.
So if you looked at any technology company in the beginning, it's owned 100% by the founder.
Yeah.
And as the technology company scales, that ownership goes way down, and as more and more people participate. Fair?
Yeah, absolutely.
Even though the founder has a lot of wealth out of it, a lot of other people create wealth out of it as well as it distributes through society. Now, take Bitcoin. Bitcoin, and funny that you say this. This is a question my dad couldn't get over on Bitcoin. So after many dinners and everything else, let's imagine. Remember, we're measuring in one system, and it's really hard because we're stuck in a system thinking it'll change. So today, they're in their existing system. There's 46, 47 million millionaires and tens of thousands of billionaires, and there's only 21 million Bitcoin. So even if all of those people held one Bitcoin, there's no way for all of those people to hold one Bitcoin.
Right.
So you have a massive shift, and it changes this. It's impossible to hold to. So it naturally equalizes. More important is this. How do you hold? Let's assume I had 10,000, 100,000, million Bitcoin. So let's assume I'm that person.
Sure.
And I want to live beyond. And the only way if Bitcoin goes to where we're talking about, is the only way to actually deliver more, get more Bitcoin, is by providing value to society. Fair?
Sure.
So if I don't want to provide value, and let's say I have a million Bitcoin, I'm going to create a standing army to control people. As a byproduct of doing that, because I'm not creating value, I'm actually distributing my Bitcoin.
Sure.
Losing my power.
Sure.
Right. So the more that you rent seek and sit on top, the more you're distributing Bitcoin. So it's a forcing function to a free market is really what it is. It allows a free market to work, and it takes away centralized power out of that free market. And as a byproduct, entrepreneurs in a free market delivering value. What is a company? It's an entrepreneur's. You wouldn't use a product or service unless it delivered value to you. Mm-hmm. So technology entrepreneurs with technology today are trying to break down monopoly power everywhere with technology to give more value. You would think that as a natural byproduct of that, prices would fall down or come down. Mm-hmm. They're not falling down because you're concentrating wealth and power from a system, and so from the existing system. So the free market isn't working.
Okay.
Right. So if you just take that logic to the end, yes, there would be a change. Yes, there would be a change. But if you looked at how much wealth is owned by the top 0.1% today, it's staggering. It's actually worse than it would be today on Bitcoin.
Right. Okay. Yeah. Okay. Now the last, I'm sort of conscious of time, but the last question I would put in front of you on this theme would be probably the most common opposition I used to hear, and I hear it far less and less now. And this is that, a government like the US, a powerful government, will eventually intervene, right? And you could say that ship has sailed, that to your arguments about the network effect. And I think that's why I like the network effect thought when it comes to Bitcoin, because we can all relate to that now, the power of companies who have accomplished network effect, the Facebook, Instagrams of the world. That's what we're talking about. But money, it's incredible. I recently listened to a episode on, I believe it was Real Vision, and it was Brent Johnson discussing his thoughts on Bitcoin. His thoughts are that if the US government's going to make a ploy to intervene, it's going to be in the next 12 to 18 months, because they see that ship sailing right now. And they've still got some tools left in their tool belt to make it very inconvenient to own Bitcoin. Now, I'm not asking you whether or not they would succeed. What I would ask you is if they made an attempt, what are some things you think they might do? Or do you think that ship's already sailed regardless and it's water under the bridge?
So again, if you're going to investigate Bitcoin and go down to the sand, put a tiny bit in for your listeners, put a tiny bit in, start to understand it. And then as you understand it more, you just decide, but do not buy it if you can't handle it going down in price, or because if you're trading Bitcoin daily, that'd be a really, it's the same as what's happening in all the altcoins, which I do not believe. I think, but let's go to Bitcoin. Don't trade it daily. Just think about it as what we're talking about as a long-term hold. If you and the best way on, put $100 on, so it starts to make you want to look more and understand it. Now into your other question. So if the people think about governments as the government can do everything, and fair enough, but the government is elected by us, and the federal government is in the U.S. There's also state governments, and so let's say right now, and these are the facts. Bitcoin is a technology that empowers human beings, individual rights and freedoms, a technology that empowers, and I believe, and like I said before, it's a requirement of a currency to allow for deflation and where we're moving to. It's a requirement. Otherwise, all wealth, all concentrate. Otherwise, you have a completely managed economy that looks a lot like Russia eventually.
Sure.
So those are the two ends of the spectrum. And so what is the government going to do? And remember, government is a collection of us. Just to say, because by saying I'm against Bitcoin, you now have to say I'm for a completely managed economy.
Right.
And so that truth, however uncomfortable that truth is starting to be known by a whole bunch of people. And what you're seeing in the US is you're seeing individual states integrate Bitcoin into their policy making decisions in Wyoming and Texas and Florida and so and in cities and everything else. And so the truth, a truth that is really hard to stop with a lie, right? And
sure.
so even though that lie is something we've always taken for granted, the truth around this technology that actually is providing is technology that empowers individual rights and freedoms and empowers it's hard to stop. So I would say that today, and now you add game theory on top of that, early countries, early states, early individuals, early corporations have an outsized benefit by going early. And so that technology kind of now, and governments are elected by us. It's hard to stop that. It's hard to stop that truth, because remember, if somebody says I'm going to stop it, there's a whole bunch of other people that want to get elected that want to say why it's important. Mm-hmm. And so you're starting to see that all over the world right now. And now I'm going to argue the other side. When I looked at Bitcoin, I actually looked at, could governments, or could you have a coordinated attack because it would take more than G7. It would take a coordinated attack that everybody would agree, okay, here's what we're going to do. And from the existing system to stop this from moving. Let's look at what that would look like. So we all know that you have debt that can't be repaid, and you have asset prices that are climbing as a result. And so what that coordination of governments would have to do is go and say, because there is no fix from the existing system. So I think about what the fix would look like, and there's, how you hear Great Reset?
Yeah.
What would a Great Reset look like? So all of those governments, and then all trickle down to every single thing we own and everything else we take for granted, would have to agree on who gets the write-offs and who doesn't and everything else. And everyone would be arguing about why they shouldn't happen there. And my debt is good, your debt is bad. Everything else, but it's all connected. And so how would that in this world today where we live with distrust because of these policies, how is that going to look? So I suspect by the time they start talking about this, no chance Bitcoin is moving on a network effect. It moves faster and faster and faster, and it's too late. And so it starts getting governments to come on side with it. I want to add one more thing, and this is probably and this is important in kind of the game theory and how this whole thing could look, because we're living in different times, right? Our existing system is failing before our eyes, and we're living through it. So now let's say I wanted to try to kill Bitcoin. I wanted to, which I don't think is possible today, how fast it's moving. So that's first. But what if, because we elect governments for short term instead of long term. What allows them to print more money is because they promise us things that they can't pay for.
Sure, and they don't have to deal with the consequences.
They don't have to deal with the consequences, and they pick somebody's pocket. They pick the middle class and poor's pocket to pay for the spending.
Yeah. So
that's what. And then the middle class and poor that are most hurt by those policies say we need to elect you to do it to us more.
Right.
So think about our human condition. And I don't mean any one person. I mean our broad human condition to believe that story that will. And now imagine governments say, okay, we need to do something. Let's let it all collapse. At which point, but let it all collapse to a point where the populace is demanding us to fix it.
Right.
And now let's introduce a central bank digital currency.
Right.
To help fix it.
Right.
Or let's take one of these crazy altcoins, which we could control.
Sure. Great.
Because they're not decentralized, or the Ethereum is not what we're talking on in Bitcoin. All of these, let's think about something like that, which we could control. So I'm playing devil's advocate on my own thinking. Right. Yeah. I'm looking at the other side on what all the possibilities could be. And I still don't think in any case it stops Bitcoin's progress, but it could slow it.
Sure.
And for a time.
Or kick the can down the road. Yeah, which we're all familiar with. That's such a great point that, politicians are career-driven individuals, just like the rest of us, but they're massively incentivized to deliver short-term results. Right. And man, it's a scary statement to think about, but it's also
and unfortunately, so this is going to go way deeper. I'll try to do it quickly, but when I think about Bitcoin and why I'm in it, I don't need the money. I don't need any more money. I'm in it I really am in it because I think it's humanity's best hope for a better future. That's why I'm in it primarily. I could care less about the money. I'm in it because the existing system won't work. I've investigated everything, and I think this is actually the best path for humanity. But how many people, and given what we said before, now how many people, if the existing system fell today and you had 2.5% of people on Bitcoin and you couldn't drive down the road because everybody was starving, that would be a pretty terrible world. So we have to find a way to get Bitcoin adoption way up from where we are right now, so that you have this transition path and you have a glide path for society that allows what I'm talking about, the abundance gained by technology to be most broadly distributed. Yes, there would still be winners, there'd still be losers, but it'd be more broadly distributed, the abundance gain from technology under this standard. That's why I care about it. But I've thought about this long and hard. Why don't people in Russia right now, why don't people in Myanmar right now, and some people do, they rise up. Why doesn't everybody rise up?
Well, I go to think about that analogy of the dog sitting on a porch who's whining, and the dog's owner's friend says, "What's wrong with your dog?" And the dog's owner says, "Oh, he's sitting on a nail." And he says, "Why doesn't he move?" He goes, "Well, it's not bothering him enough to move, so he just complains about it."
And so, but anyways, if you think about this, and if you think about terrible regimes through time,
sure.
Why doesn't most of the population revolt against that? And what ends up happening is that control for the allure of safety, my own personal safety, is too much to be able to. I hope somebody else does it. So there's a silent majority.
Yeah.
That doesn't do anything. And so I would like to see for this to happen, because right now there's too much of a silent majority that would just go along with the status quo.
Yeah, because the unknown is scary, right? The
unknown is scary.
And
so what I think we need in Bitcoin as this happens is people start to really understand the implications of the existing system and the implications of where that path goes. You need a whole bunch of people in Bitcoin, and I'm going to defend the maximalists in this statement, but I think about it differently than them. You need a bunch of people fighting for this network, no matter what. Right. And they can come across as aggressive and everything else. And what I don't like about that is it doesn't allow a lot more people on, because it becomes too in your face.
Right.
So I try to show up differently on that. But
yeah, and I appreciate that, by the way. And we'll get into why in a minute. But carry on there.
But you need people defending this. You need people defending this network at all costs.
Right.
Because it is actually that important where this transition is going. It's that important for humanity, I believe.
Yeah, and I agree. And your I guess more moderate pitch is so important because, and I can speak personally, one of the biggest oppositions to Bitcoin is the sentiment right now. And I come from a place of watching cycles for a living, and I've seen numerous market cycles, and the behavior at the top is always similar. It gets a bit obnoxious, right? And in Bitcoin, that manifests in the sense of have fun, staying poor, whatever. It becomes volatile or sort of vile right away, right? And it turns you off. It's okay, I've seen enough of this behavior in other markets over the last 12, 15 years that I don't want no part of it, right? I tend to, when things get that crazy, that frothy, it's time to step back and let that ride out, but I'll get off now. Thanks. And it's unfortunate, but you have to be able to cut through that noise. It's important. And I've been able to cut through that noise and get over that. It doesn't bother me in crypto like it maybe did, 6 months ago or whatever. But
yeah. And I think that's a really good insight, because when I look at that, kind of have fun saying, and again, write a book and be on a speaking circuit everywhere. I'm in the middle of this all the time. And a bunch of my friends now, and people I really respect, would say that. Right. And I still really respect them.
Yes.
But nothing that anybody else says is going to kind of hurt my feelings I've done my work on why I believe and everything else. And unless somebody can tell me how the existing system can work without concentration of power and the negative externalities, thank you. I'm long Bitcoin. But right. if you can tell me how your system how the system works from a first principle standpoint, I'm willing to listen. And so now when I look at this, there are certain people in an audience, kind of on the existing system side. Let's take Paul Krugman, for example, or I forgot his name. But let's take some people that absolutely know what we're talking about and how the existing system cannot work, yet they still push back and defend it. And so I understand. I don't do it, but I understand how somebody could turn on that and just get frustrated and say something like, "Have fun staying poor."
Yeah.
The problem with it, in my mind, is what they don't realize is that spins up into the greater community that they don't know is reading that same stuff, and then won't look at Bitcoin deeper. Yeah, because it looks too edgy.
It looks childish.
So it looks childish, or not just looks childish, or it looks like it's too hard to learn, and there's a whole bunch of crazies in it.
Sure,
it's not true. But it might seem like that on your first look at Bitcoin, because the existing power structure is in the news all the time, and they point out "have fun staying poor" or something like that, which spreads like wildfire.
Of course it does. Yeah, the punchline will always get the headline.
Yeah.
Okay, look, Jeff, we're out of time, unfortunately, because I still have like 3 or 4 buckets on my sheet that I wanted to talk to you.
We'll do it next time.
Yeah, we'll do it next time. Education. I mean, there's so much other stuff I want to get into with you. So thanks for coming back on. It is great to see you. And
great to see you too.
Yeah. And we will do it again in the near future, but I appreciate your time, man. Thank you.
Yeah, no problem, Jay.
As always, if you enjoy this content, please hit subscribe. I'd love to have you on the team. And if you want to take the next step and go a bit deeper with my content, I publish a free weekly newsletter every Friday where I debrief my portfolio. I distill the top lessons I've uncovered from the guests I've had on this show every week. And I talk about sectors and industries that I think are poised to move, areas that I'm looking for opportunity, and places that I'm allocating capital. I love writing it. We publish every Friday. The link is right beneath this video. Love to have you join the tribe.